47 basis points negative on the German side. That's the first part. The second is you also have to look at not only what is happening to US Treasury yields, but what is happening to the currency. The Trump administration has been very keen to have a weak dollar. They are having it. But the risk is that you can have a dollar slump in the new year. And that is the risk also for treasuries, Brian.
Well, the chart shows the dollar has been weak. Chris, sit tight for 1 second. We're coming right back to you. But right now, we actually have a news alert in the bond market. Goes exactly to what we were talking about just now. Rick Santelli, the auction of 10 years. What's your grade, Professor?
Well, I'll tell you my grade in a second, but I will tell you this. Your side of that argument you're having wins on this auction because I give it an A. You could talk about the weak dollar. You could talk about all the sins we've committed from a balance sheet of the country standpoint, but we may be the cleanest shirt in the hamper because this auction just found huge demand. $38 billion of 10 years. It's the second reopening of an auction originally in November, and the yield 0.1164. It was trading 1.7.
I wouldn't pay too much attention to that fellow. He certainly said some crazy things in the past, as have a lot of people on this particular channel. So this is a special report. I just wanted to give you guys my thoughts on some potential volatility that might be coming up. Obviously, I can't predict the future. I can't tell you what is going to happen, but what I can do is do a lot of analysis on a lot of data points in terms of what's been happening, what is currently happening right now, and I can extrapolate from that what I feel might happen going forward. So before we get into more current events and my concerns as far as impact to the market and otherwise, let's first of all address a couple of assessments that I've made. And again, as usual, when it comes to anything regarding investments, you know, it's really up to you guys to make your own judgments in terms of what you feel comfortable with. As I always say, never invest more than you're willing to lose, right? And any money you throw into your account, make sure you're willing to lose that money. Depending on the types of investments you make, you can actually lose potentially more than the money that you put into your account. For example, we've talked about in the past, selling short. So in that scenario, you're trying to profit from the market going down. However, as is typical when you're doing any kind of trading, it's kind of a bet. You know, whoever it is on the other side of that trade perhaps disagrees with you. You think the market's going to go down, they think it's going to go up. So put your money where your mouth is. But with selling short, the risk can have no limits, because you got to buy back those shares that you borrowed, and there's no cap on how high the price can go up. So, you know, the limit of how much losses is based on however high the stock price decides to go up. How wrong you are, that's the limit of your losses there. So with that being said, my assessment based on what my expectations are for 2021. Brief snapshot in terms of strategically what I did for last year. So exited the market based on unpredictable volatility that is politically sourced, to put it nicely. Certain person that used to have a Twitter account started tweeting a bunch of craziness randomly at 3 o'clock in the morning and tanking the market randomly. So I'm not smart enough to figure that model out. There's people perhaps a lot smarter than I who have figured out models where they're able to somehow factor in the Trump effect, but that's beyond my expertise. So too rich for my blood. So pretty much I exited the market after doing really, really well. I made a lot of really good buying decisions. I remember one of my things that I'm most proud of last year is Boeing. I jumped on Boeing when Boeing was getting hit really hard, and I saw an opportunity there. Temporary dip. I had confidence in the company overall. I always tell you guys, I ideally invest in the things that you know about. So people come to me asking me for investment advice and stuff like that, and I say, listen, man, they want to know, should I buy a stock relevant to, I don't know, furniture business? I say, listen, I don't know anything about furniture, and they'll be into furniture. I'm like, you're the one that's into furniture, right? You know about furniture. So you got to make a judgment based on your knowledge of this business, and make a judgment call, and again follow the general principles of controlling risk or assessing risk. So with that being said, I am a person who has always loved aviation. I'm former Air Force, and previous to that, Civil Air Patrol. So I have a long-standing affinity for aviation. I definitely know a bit about Boeing and other such companies. So based on that, I felt like undervalued, temporary losses. I can make some quick profits here, and so I did. They were down, they were struggling, all this negative press. I didn't care about the press. Jumped in, and I held it for a while. And then I did one of the things that I think challenges a lot of people. I sold on one of my best days. The stock, I had so many gains. The price went up so high since I purchased it, and I was looking really good, and it was still rising, and I sold. But that's the fundamental: buy low, sell high. Don't get emotionally invested into what you're investing in. Although there was a temporary hit, there was an ongoing and long-term struggle with the company, with what happened. I'm sure you guys are aware of the issues they had. So there was no way of knowing where that was going to go. The idea of holding them long-term at that moment would not be advisable. But emotionally, looking at those gains and seeing it going up, and it might continue going up, being able to sell it at that point, I mean, that takes a level of discipline of just separate your emotions. I took advantage of a short-term opportunity, worked out my way, price rise significantly, take your money and run. So I sold, closed out that position. So anyway, in general, I had a couple of different moves that I made like that, and I did really good. I had Facebook for a time. I had Apple for a time. Did really, really well. Portfolio was just going up and up and up. And everything was fine, even cryptocurrency. I jumped in. You guys remember I had a price target of a bottom of 3,000 on crypto. You guys remember I went live and I told you guys that was my target bottom. And surely enough, I don't remember exactly what it bottomed out at, but it bottomed pretty close to my target. And I think I held that up until I think it was 10,000 was where I was kind of like, okay, it's been a good ride. I made some good profits. This thing could skyrocket to who knows what. But I did an analysis based on the previous high or peak in crypto. And I didn't think it was going to go as high. So 10,000 was where I was like, again, put the emotion aside. You're selling something that's on it's going up. You don't know how much money you're gonna make. I mean, you could be losing out on a lot of potential gains, but to be able to put that aside, put the greed aside, I jumped in at a good price. I saw those gains and the price going up. I made some good profits. Take your money and go home and live to play another day. So I did that. So that was last year, and then I finally exited the market completely because of the nonsense, and I waited for the crash, which I had been waiting for I think it was about 2 years I was waiting for that crash because I knew we were overdue for a crash. And I had no way of knowing what would cause a crash, or if we would even have one necessary. Well, it's always, there's always, the market has cycles, right? It's gonna be something that's gonna happen, right? It's just a matter of when and the details, which I didn't know the details. I didn't know we were gonna have a pandemic, but I knew that we were overdue. So I exited the market completely. Again, I did a good prediction when the market started crashing. I said, all right, now's the time. I made my assessment of how low it was going to go. I did that basically technical analysis. I'm looking historically. I went way, way back in history. I look back and I see what's the worst, because I knew this was going to be a big one, right? So I said, what's the worst that I can expect? So let me see some of the worst times that we've had in the stock market in the past historically. What does it look like to have a massive crash? And then from that, I extrapolated what I was comfortable with in terms of predicting how low it was going to go. Of course, you have to make some level of creative assessment in terms of a lot has changed. When you look at the really, really big crashes in the past, the world we live in today is considerably different. So you got to factor that in. The market is very, very different. You have a lot of individual traders now. You have all of these commission-free accounts. So you have regular people that are trading as well. And when you open the market up like that, where it's commission-free, that can have a significant impact because, we've got, over 350 million people in this country. Obviously, most of them are not going to be opening up accounts, but even if you have 5% of that, that's a lot of people. Smaller orders, obviously, you can't compare with what they're going to be doing on an institutional level, but still, I got to factor that in and other details as well. So I used that to make my prediction. Again, I came pretty close. I jumped in, I think, just before the bottom of the market. So when I jumped in, I got a little bit of gains, short-term gains, and then it started to drop down again because it wasn't quite the bottom. So I was negative, slightly negative, not really much, for, I don't know, a week or two. And then we bottomed out, and then that's all she wrote. When the market came back, I was looking pretty good. So right now, what happened after that was the market bounced back much better, much more significant than I was expecting. Obviously, again, I don't have a time machine. I don't know the future, right? So I believe what happened, which sort of strayed from my crude model. I'm not a guy that gets into complicated. I got this strategy and mathematical this and that, and I use this pattern. And no, I just keep it real simple, because the way I look at it, I mean, if you're some really sophisticated, investment banking firm where you've got a team of traders and advanced algorithms, and you have a whole infrastructure set up, you can do things that you as an individual are not going to be able to do. But me as an individual, I can't predict the future, so I just, my personal preference is I don't buy into any kind of magic strategy and all this kind of stuff. I just keep it real simple, technical analysis, stick to products that you're familiar with, and look at history, look at general market conditions, and I make an assessment from that. So the very crude models I came up with were pretty decent. The deviation came from the market recovering faster than I anticipated, and the market actually surging even more than I anticipated. And I think that was a factor of momentum trading. So, I'm not the only person that was looking at, market crash, discounted price, obviously. So other people thinking the same thing. And then this creates a sort of a wave, right? So, I jump in at the bottom price, other people jump in, more people jump in, and then the prices are rising and rising and rising because everyone's like, now it's coming back. I want to jump in on this. I want to make the profits. And then you have these latecomers that, really, really passive people that maybe were like, I'm not sure. And they waited to the last minute. Or maybe some people weren't paying attention. Whatever the deal is, you have some people that late in the game, they're like, well, the market's looking really hot. I think we're good to go. and then they're looking at it going up, like, all right, let me jump in. So in my opinion, the market wasn't supposed to go as high as it went. I think some people sort of pushed it up, just basically following the pattern, because I was anticipating we're going to be maybe a quarter or so below where we fell off of when the market first crashed. But we went right back to where we were before the crash, and then we started going up, and I was like, okay, so what does that mean? That means my feeling is that 2021, we might be perhaps overvalued in terms of needing a little bit of a correction. I don't think necessarily a major correction, but I just feel the market was a little bit hot. I also am concerned about sort of long-term aftermath of the financial bleeding that we've been doing in terms of people losing their homes, businesses being shut down. You have major corporations filing for bankruptcy. I knew that was going to be something that would continue to happen. So we wouldn't know the full extent of the damage until a period of time. And a continuation of negative news like that, unemployment staying high and things like that, with a market that's perhaps a little bit overvalued, to me is pointing to perhaps a little bit of a reality check, aka correction. So the market sort of pulling back a little bit. Now, when that would happen, I don't know. I can't tell, but that's the way I look at it. 2021, I think we've seen too much rapid growth in the middle of a little bit too much of chaos in terms of financially, in terms of what's happening in the country. At some point in time, and again, the surges that we see, there's logic to it because you're investing in based on predicted future returns, right? We're looking at, things are really, really bad where we're starting to turn around now. It's only uphill from now, or downhill from now rather, because we feel that we've been through the worst of it. And if we've been through the worst of it, then that means going forward, it's going to be just going up, right? That's the general idea. So that's what people are buying based on, not based on now, because now, not so good, right? But we're anticipating that things are going to be getting better and better. However, people have already done that. We've already invested in future returns. So now I look at where we're at now and where we're heading into, and I don't see a reason for the market to be so optimistic long term. So that would mean kind of a boring 2021 perhaps. Technology stocks are a little bit unique in this scenario because obviously Amazon, kind of a unique setup there in terms of they benefited from the chaos. But otherwise, I felt like it would be a boring 2021. Market goes up, market goes down, not really moving around. And then again, some form of correction. So that's my general feeling about 2021, how it's going to be. I don't really see any really good times return to normalcy until 2022, 2023. That's my very, very conservative, sort of cautious outlook on things. I just feel that there's got to be some kind of reckoning of what's happening right now. The damage and the bleeding can't be over, and I can't see the market continuing to be so aggressive with that in mind, with a little bit of a reality check. Now, let's jump to something more immediate. So the focus of this particular live stream. So I feel that people need to be very cautious in the next 10 days, based on what I've been seeing, I've been doing a lot of research in terms of what's happening right now. I've been outside of the box. I never constrain myself to the mainstream narrative. So what I tend to do is I look at information from as many sources as possible. So, you have more sort of liberal sources of news, where CNN, MSNBC, they're going to give you part of the story. Then you have the conservative side, where you have more Fox and some of these other sources. Then you have independent sources. And then also I've been looking at online chatter. And number one, and again, a reminder, I don't have a crystal ball. I can't tell the future. I would be very careful in the next 10 days, as far as not even talking financially. I would stay away from any especially the 17th through the 20th. I would stay away from any of our nation's capitals. I would stay away from government buildings. I would ideally stay home if you can, and I would definitely be paying attention to the news and what's going on. What happened on January 6th was not a shock to me. I was expecting that. I was actually expecting much worse. And again, this is just based on paying attention and not getting caught up in a mainstream narrative, actually doing the research and looking at a lot of different sources, and I could see where things were headed. So no surprise on the 6th. Only surprise for me was that it wasn't worse than it was. And as we found out more details about what happened, I was able to recognize that, in fact, my expectations were fairly accurate. We just got lucky. What they were planning to do, and there were various groups with various intentions, but some of those people, they were planning something much, much worse. And where we're at now is that they are not done. There's a lot of chatter online where people feel like they're even more motivated now to do something. There's a now or never attitude. So what that means is we got lucky the last time. We may not get lucky the next time. At a minimum, there is the desire and intention to basically make certain hostile moves throughout the nation. I believe they would like to. Whether they actually do or not is another story. They would like to target all of our capitals. I don't see that happening, like all of them, but enough of them to be concerned, which is why I would advise you guys to stay away from capitals and government buildings from the 17th to the 20th, just in case, because we don't know. All we do know is, just dealing with the facts, there is a large amount of people that have the desire and intention to, again, take hostile action in the next week or so. I wouldn't be too caught up on the 17th to the 20th. We don't know when and if they might do what, right? So all we do know is that the logically highest probability of something happening would be in the next 10 days. So I would definitely be careful. And then beyond that, in terms of from an investment standpoint, these are obviously not good things for the market. Obviously, if something happens, that'll be a bad thing. In any kind of uncertainty is something that's not good for the market. Well, it depends on what you're doing. There's certain types of trading, you like volatility, but even before that, I'm not a genius, right? I've made some pretty good calls. I'm proud of my record, but I make my assessments based on the same information that is available. I mean, I in this instance, I think I'm a little bit more informed than probably the typical investor, just because, again, I'm going deeper than just what is being discussed in the mainstream. I think a typical investor is probably not digging as deep as I am. But in general, I think there's enough information out there in the mainstream that investors will be thinking variations of what I'm thinking. So that means potentially we could see some sort of downward movement anytime now, today, tomorrow, anytime in the next 10 days or so. And if we may be getting a series, depending on how things progress, we may be getting a series of sort of negative news regarding this election stuff. So every time we get a hit with something significant, like something negative in the news, some event happens, not necessarily a hostile event, just talk about concerns, that can drag the market down. And then if we get another thing and another thing, the more that we hear this kind of stuff, the sort of the more negative investors will feel concerned, and that concern can lead people to perhaps saying, I don't know what's happening, let me step out of the market until things get more stable. Oh, it's back up, look at that, we're up 0.03%. So we could see a few days that are not so good and things trend downward depending on, again, what we see in the news. And then if we have a major event in terms of hostility, then that would be the final straw where we could see a big drop that could maybe get to the level of a crash. So again, not being able to know the future, I think at a minimum, at least consider that you have a lot of indications that we could be heading towards some bad days and even a potential crash. I don't think anything near what happened in March, but that all depends on what happens, right? If my feeling is if they do something, you have another incident, I feel confident that it will not be successful, whoever these people are, whatever they're planning. However, if it is successful to some degree, where we end up in a situation that it's a multiple day thing, and use your own imagination what we're talking about, that could drag the market down significantly. I still don't think we're going to hit what happened in March, but that would be very, very bad. So we could see a crash if something crazy happens with this election stuff, but I don't think it'll be too crazy. But if they're able to really have it be an ongoing thing, that would be very, very bad. Multiple days of some kind of chaos, that would not be good. If something goes down as far as the market, it would be better if it's kind of like the last time, you had a day, things were going on, all of a sudden, what's happening? They're breaking in. What's going to happen? And it's on the news. And then I don't know, 5 hours later, they got them out, and now it's kind of like what happened. That's kind of 5 hours of chaos, and then we're good. But if it's something bigger than that, that's a multiple day, that would be the worst case scenario. So what that means is, that's for you. Just, I would say, consider, if you are able to know ahead of time that any of these things I just described were going to happen, what action would you have taken? Do you feel like you want to be out of the market. You don't want to risk um, any kind of market crashes or whatever, because the recovery might not be back to where it was, right? So if the market goes down 3%, 4%, and then it only recovers 1% and it stays there for a period of months, um, are you okay with that? Being 3% down for some period of months. So I think the major consideration is what's your window of where you care in terms of if your portfolio goes down 4% for the next 4 months, do you really care? Right? So 5 months from now, you are fully recovered, and then your portfolio starts gaining. Is that okay? So I think if I were planning to make some moves, like in the next couple of weeks or something, like I wanted to liquidate some of my positions and buy a house or something, that's where I'd be concerned. I'd be concerned because obviously, if your holdings are going to lose significant value and take some months to recover, then that's obviously not good. So I would want to extract some of that liquidity now before the value drops. So that's kind of the way I would look at it. But if you're a long term like me, then you might not want to do anything. What am I gonna do? I haven't fully decided yet, but I think for the most part, I'm not really concerned. I bought in at the bottom of the market in March. So my gains are so significant that I can weather significant losses. I'm sorry, not I won't be taking losses, but the market can go down significantly and I'll still be in the green. 1 second. Let's take a look. 1 second. I will switch this over to this guy. So I may not do anything. I am okay if my portfolio is down for the next few months. That's not something I'm particularly concerned about. The only thing that I would maybe consider making a move with, or at least looking into, is any new positions. So I have been making some investments with, for example, Airbnb, which recently had an IPO. They started out really good. There's a little bit of a pullback. I would be concerned about any kind of, market decline from the point where the stock is right now for it to go down even lower. Again, I just bought into it, so I don't have a lot of gains right now. And in fact, when they had some negative days, I bought. It's I believe the term is averaging down. So basically, I want to keep my average price as low as possible to maximize my gains for in terms of in the future. So when the price went down, I bought even more. So that's kind of weighing that position down in terms of I think I was at what was I was at I think close to 20%, and then I cut that in half, so maybe 11% or something like that. So basically, the short of it is I don't have a lot of room for negative movements. I will go quickly in the red in that position. Now, that's a long-term position for me. I personally am a host, so I'm vested in that market. So I'm gonna go along with that. So, momentary changes doesn't really affect me, because my window is at least into the summer, June, July, or something like that. I'll make a assessment. So anything that's happening now should be recovered and corrected by the time that I even care about how I'm doing. So this is, you can't even see that. 1 second. So this is how we are looking right now. I'll make it more visible. So if you look, this is how things are looking right now in terms of the portfolio. So foreign stock 16.7%, US stock 11.8%. But on the day, the portfolio is negative 9.3. Not exactly a very exciting day, and that is being reflected there. But overall, still looking pretty good right now. So I may not make any changes in terms of based on what might be happening with the potential volatility. But I still have to. I got to think about that. I got to decide what I want to do. Sab's Guitar Archive. What books you recommend for quant wanting to know more about computer science aspect of trading? So could you elaborate in terms of the area of study or focus? I mean, are you looking to learn more about Python, for example? I'm pretty sure that is a powerful skill to have for what you're looking to do. Quant wanting to know more about computer science aspect of trading. So looks like you're just looking to not get into something new, but to broaden your knowledge, which will help you with your main focus. So it kind of what I do, where I learned Python not to be a Python programmer, but to better understand the systems that I know Python pretty well. Oh, nice. That's pretty good. So without knowing the specific area of focus that you are looking to learn more about, I wouldn't be able to give a recommendation. But if you let me know what area of focus, I could perhaps give a suggestion there. But perhaps you're not even aware of necessarily what the area of focus should be. You are just looking to know more about the computer science part of the business. But if you let me know specifically what the area is that you're looking to know, I can give you a recommendation. If it's just in general, then I'm probably not the best resource to give you that information, as I am not a quant guy. So, on that note, we're up 0.03%. Efficiently distribute data. Then that is not something that I would actually be able to advise you on, unfortunately. I do not have the expertise in that particular realm to give you a recommendation. So other than that, what I would say is the way I look for, that what you're doing right now is a good idea. Get a recommendation from someone who can, this is a book that I'm aware of, I recommend this. But since I can't give a specific, I'll just give you a tip in terms of how I identify books if I don't have someone that can recommend something for me. Typically, I will use Amazon. But the concern is you have a lot of fake ratings in there. So you can look at a book, you can go there and you can type in what you want to learn about. And then, it's 1,000, reviews that are great or whatever. But unfortunately, you can't trust that. So my strategy that I utilize is I look at the top reviews, I read them and make an assessment whether they seem like they're valid or it's bots. I read what they're saying, what kind of level of detail they're getting into. Are they just saying this is the greatest book ever, or are they specifically mentioning why they like the book? And is it verified accounts? And then the other thing that I do to sort of circumvent the cheating is I'll look at the negative reviews and consider that you can also have fake negative reviews. So this could be a competitor that's saying this sucks, but it really doesn't suck. So with that in mind, look at in the negative comments, is there a pattern? Everyone that doesn't like it is saying the same thing. This book is super basic. This book is super basic. This book is super basic. I might want to wonder maybe the book is super basic. And then I actually would take that information and go to the top reviews and see if the people who, even the people who like it are saying, my only negative is it is kind of basic. Then I'll be like, okay, if the people who hate it are saying that, the people who love it are saying it as well, then I want to factor that in terms of what's real. So try to balance out what the negative reviews are versus what the positive reviews are. Also, maybe be aware of something that's love it or hate it, where it's like either everyone loves it or everyone hates it, not a lot in between. I think normally you should have throughout the range, right? So if it's not much going on in the middle, that's a little bit suspicious, because someone should be able to say it's a great book, but it could be better, and they give, the one level down. Someone should say, this is kind of a vanilla book or whatever, and they give it like in the middle. If I don't see a lot of stuff in there, I would wonder about that. And finally, I would look at other sources. Don't just look at Amazon. So maybe you find a couple books that you feel look like they're good, they have good ranking. Then look at other sources, other websites that have reviews on books, and try to cross-reference. So the same book that you picked here did well there as well, and somewhere else as well. And then also take advantage of the Amazon's ability to see the first few pages, look at that as well. And then finally, you can just Google around, and because if it's a really good book, you might see people in forums talking about it and saying it's a great book or something. So that's the way I approach my research in terms of when I'm looking for a good book. And I've done that a lot for a very long time, since 1999. I'm dating myself, but I'm mostly self-taught. So my knowledge comes from on the job and also self-study. So I pretty much have done variations of what I just described myself, to purchase books and to acquire all the skills that I have. And I would like to say, I applaud you for your efforts to expand your skill set. I mean, that's something that I did exactly as well, where I think a lot of people are too limiting in their thought process, where they will, this is my job, so I'm going to study that stuff, and I don't really care about the other stuff. That's your job. This is my job. I really believe, to get to the highest level, you want to be very successful in your career. You want to get to, subject matter expert. You want to get outside of that tunnel, and you want to learn as much about, as much as going on around you as possible. So if you're on the business side, at some point expand into the technical side, learn more about the technology side of things. If you're on the technical side, expand your knowledge to learning more about the business side, because overall, the most valuable assets, as far as you working for a company, or even, you could work for yourself, right? I think the most valuable assets are the people that not only have expertise in terms of your specific role and what you're doing, but you also have a good sense of overall the business flow. What is the business that we're in, right? What are the things that are important for the success of this business? And understanding all the moving pieces, right? So if you're supporting a system or you're developing for a system, what are all the dependencies in terms of related systems? What's your data flow? And your dependencies and all that kind of stuff. That, I think, makes you a very, very valuable asset, because from having not only a specific expertise, but also having a good knowledge of overall the business and the technology, This allows you to be very, very powerful in terms of communication. So you have to communicate with, you're technical, you have to communicate with business side, but you know the business side, so you can talk their language, you can understand what they're saying, right? You're on the business side, but you've tried to learn as much about technology as possible. So when you're talking to the technology guys, you can give them really articulate and intelligent, questions. And when they talk to you, and maybe they don't break it down enough, you have enough technical understanding to be able to interpret what they're saying. And that allows you to be really efficient. Where somebody else who only knows business, they will stumble talking to the technical guy who can't break it down. You can shine and have a better understanding. And also, whatever your job is, whatever your focus is, the more you know about the entire business flow and technology flow, the more sort of informed you can be in whatever you're doing, whether it's development, whether it's support, whether it's business, project management, whatever it is. So knowledge is power, and don't get tunnel vision. All that babbling on, that's basically what I just said. So thanks for watching, and everyone be safe. Again, in particular, from the 17th to the 20th, I would definitely, that's not a time to not be paying attention. Follow the news, and stay close to home if you can. And I'm hopeful that things don't get too crazy. Not even thinking about the stock market, more so our country. And hopefully we can move on. And a few weeks from now, we can begin another chapter where we can return to stability and get this country back on track. Right now, we have to rebuild our reputation, and there's a lot of work to be done. The pandemic, the economy, the job market. We really, really, really need to get beyond this chaos. But unfortunately, the chaos is going to continue to the very end. And then after we go through the 20th, there will be some level of chaos continuing. Some of the games that are going on are going to be running through to, I would say, to summertime. There's a lot of stuff going on, and it's I think going on beyond the scope of my channel and what I wanted to discuss here. But let's just say some of the theatrics will continue. But I think the biggest concerns, the biggest chaos, the biggest drama is going to be up until the 20th. So hopefully, if nothing too crazy happens between now and then, we should be able to breathe a sigh of relief somewhat. Again, it's still a lot of work to be done, but return to normalcy, right? And then hopefully, at some point, we can go beyond just normalcy and to growth. So, thank you for watching. Especially important in trading, scientific process key. Absolutely. All right, thank you for watching, and everyone be well. And I'm out. Another live stream that was supposed to be 10 minutes and ended up being 5 hours. Yep. Dun, 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 dun.